Welcome. Welcome back to this channel. This is Unfiltered Forex with me, Clement. And in this video, which will be the first part, it's a video about financial statements, and it's a series of videos and lessons about company financials and the financial statements you need to know about and how to actually analyze them and the basics you need to know about and what is contained in these statements. Okay, so let's begin. Financial statements, what are they? These are a sum of activities, a summary of activities, and overall performance of a business. Okay. And the reason for financial statements, usually for investors, to stimulate investor confidence, for accountability and transparency, and even to get funding. Like if a company is looking to get funding either from investors or from a bank or from any financial institution or individual, it's good that the business keeps a record of the financial statements in order to assess the financial health of their company, how well they're spending their money, and see if it's a viable option to fund them. So there are three main financial statements, and we're going to go over them. Balance sheets, income statements, cash flow statements. These are the three main ones. So let's start by looking at the balance sheet. Don't worry, currently at this time, I'm only going to look at the general definition and then I will start talking about the balance sheet and then the others will come later. So a balance sheet. A balance sheet is a record of what a company owns and owes and the worth of the company. So this, as you've heard, it contains three main things: what a company owns, the assets; what a company owes, the liabilities. This is where the debts are; and the worth of the company, the equity. Equity, which is the difference between assets and liabilities. The next one is the income statement. An income statement shows what a company has sold, the revenue, and its expenses and net and gross profit or loss. So the income statement, this is where you will see how profitable or unprofitable a company is. The cash flow statements show how cash moves in the business through operating activities, investing activities, and financing activities. So a cash flow statement essentially shows how money moves in the business. That's the general definition of these financial statements and what they are. And as you can see, when you have these, you have a good picture of what this company is doing. Okay. And once you understand these three statements of any company, then at that point, you have a clear picture of the financial health and financial capabilities of the company. The balance sheet showing the assets and the liabilities the company has. Income statement shows the sales and revenue, profit and and the expenses, the net profit. Cash flow statement shows how cash moves in the business. Okay. And something you need to understand here is that these balance sheets, they take different formats given different companies in the different sectors. Okay. So like when you are looking at a balance sheet of a bank, it's going to have a different format from a balance sheet of a company that deals in selling goods. All right. Selling goods like a company like Tesla, they sell cars. Yeah. The Tesla balance sheet is going to be different from the balance sheet of a bank like JP Morgan. The metrics that have been listed there is going to be different. Okay. And even when you look at the regular businesses, there is a difference between goods and services business. Okay. So the balance sheet of a business that deals with goods is not going to have the same metrics you would use to evaluate the financial stability or financial might of a business dealing with goods are not the same metrics you're going to use when you're trying to establish the financial stability of a business dealing with services. Don't worry, we'll get into details later on, but for now, just get that out of the way. It's good you understand that. Another thing is that the balance sheet is it's recorded at the end of a certain period of time. Like if you see a balance sheet, for example, it's going to show you. Let me pull up an example. So here we have a balance sheet. This is the balance sheet for Tesla Incorporated, and what a balance sheet is that it shows the assets at the time of recording assets of the assets and liabilities of the company at the time of the recording, meaning the balance sheet shows the positions at a certain point in time. Now this shows that as at December 31st, 2023, you can see the date is very specific. This is how the assets and liabilities of Tesla were looking like. Okay, yeah, you can see this is the official Edgar website for the SEC. The balance sheet shows the positions, the assets and liabilities of a company at a specific point in time, meaning as at December 31st, 2023. This is how the company, this is how Tesla's had its assets and liabilities. Okay, the other one is the income statements and the cash flow statements. Here it is. Tesla Incorporated Consolidated Statement of Operations. Okay, so the income statement can also be called statement of income or statement of operations. Shows you can see the revenues, cost of revenues, operating expenses, and the net income. Yeah. So the balance sheet, remember we said that one shows the positions at that point in time, but the statement, this income statement shows for a certain period. All right, this is an annual report, so it's going to show for the year ended December 31st. All right, so this is from 2021 January to December 31st, from 2022 January to December 31st, 2023 January to December 31st. So this is periodic. Okay, it shows the statement of operations shows the operations of the company within a certain period of time, but the balance sheet shows the assets and liabilities of a company at a specific point in time. It's the same case with the cash flows. Yeah, here is the cash flow statement. Tesla Incorporated consolidated statements of cash flow. Yeah, it's the same. It's for a certain period of time. All right. It shows how money moved in the company through a certain period of time. Okay. So yeah, this is for 2021, the whole of 2021, because this is an annual report, the whole of 2021 up to December 31st. The year ended 2022 from January to December 31st. Year ended 2023 from January to December 31st. So yeah, this is periodic. Statement of cash flow is periodic. Statement of the income statement, statement of income, statement of operations. It's also periodic statements in the balance sheet, but the balance sheet is at a specific point in time. All right. This is as of December 31st at a specific point in time. Right. That's important to note. Okay. Another difference important to note is that now there is an annual report and there's a quarterly report. All right. Annual reports and quarterly reports. The annual reports are audited. Audited meaning they have been verified to be true by the relevant authorities. Okay, but the quarterly reports are unaudited. So when you're trying to assess the financial health of a company, this is the case, of course, given the current context. We're talking about publicly listed companies in the U.S. stock market. Okay, so the annual reports are usually audited. The quarterly reports are unaudited. Unaudited meaning they have not yet been verified to be true by the relevant authorities, but the annual report is usually audited. Okay, so this is especially important to note when you're trying to assess the growth of a new and upcoming company. Companies do cut a lot of corners, and some do very shady businesses when they're still in the early stages of development because they're trying to get on their feet. Okay, so they might cut a lot of corners, and there might be a lot of things that have been overstated or understated in the quarterly reports because they're usually unaudited. So what you want to focus on is the annual reports, which are audited and have been verified to be true. And in case of any confusions, there are usually notes within the report to clear out the confusions. So yeah, that's another difference you need to know about between these among these financial statements. Every quarter, at the end of every fiscal quarter, the company is required to make public their statements, those three major ones. Another thing, yeah, then at the end of the year, not at the end of the year rather, but rather at the first quarter of the following year, that's when some companies do release their annual reports of the previous fiscal year, the ended one. Okay. The audited one now has been verified to be true, and you can use that in your analysis. Okay, yeah, that's it for this video. I hope you found it helpful. In the next video, that's when we'll start talking about the balance sheet.